So this is a very exciting panel that is probably one of the most newsworthy areas that we've been seeing in the last few months, and it just flows on the rest of what we've been talking about at this conference. So I have a great panel. We're going to talk about crypto ETFs and how we deliver that kind of exposure to investors. I have three panelists: David Lavelle, of Global Head of ETFs at Grayscale; Simeon Hyman, who is Head of Investment Strategy at ProShares Advisors; and Anna Paglia, Global Head of ETFs and Index Strategies at Invesco. I'm going to have each of them introduce themselves and their firms for just 1 second. For a minute and a half, and then we'll go right into questions. So let's start off and kick it off. Dave, let's go ahead and kick it off.
Great, thanks, John, and thanks to the Center for.
Oh, by the way, Dave is a Hoya. Just want to point that out. He knows his way around campus here pretty well.
Thanks, John. Super excited to be here, and thanks again, and thanks to the Center, not only for this event, but for all that you do for broader industry and obviously for the student population as well. I'm sorry that we're not able to be there on campus in person, but great to have the event virtual regardless. So Dave Lavelle, I'm the Global Head of ETFs at Grayscale Investments. Grayscale is the largest digital asset manager in the world. We have over 55 billion in assets across 15 products. I think I'm the only person on the panel that doesn't have an ETF, despite being on the ETF panel, but we certainly have aspirations to transition our products into ETFs, and our flagship product, the Grayscale Bitcoin Trust, is in excess of 40 billion in assets. And we most recently filed for our Grayscale Bitcoin Trust to convert into an ETF. And our Grayscale Bitcoin Trust is the largest product in the market that actually holds physical Bitcoin. So we're excited about building out our ETF franchise and really excited to participate on the panel today with my esteemed panelists.
Great, thanks, Dave. Anna, let's move to you.
Sure, thank you so much, John. Thank you for having me. It's great to be here with my colleagues in this panel. I was listening to the panel before this one, and it was just so intriguing and phenomenal. I'm Anna Paglia, Global Head of ETFs at Invesco. Invesco is a global asset manager with $1.6 trillion in assets today. Our ETF and index strategies platform account for just a little over $500 billion. We offer ETFs. We are highly focused and highly committed to offering Bitcoin ETFs, which doesn't happen today because of the challenges and regulatory constraints that we are all very familiar with. But we have a high conviction in digital assets and Bitcoin as an asset class, and I'm happy to talk about it in more detail.
Great, thank you. Simeon?
Thanks very much for having us. My name is Simeon Hyman. I'm the Head of Investment Strategy, and I run the Investment Strategy Group at ProShares. We're over $70 billion asset manager, mostly ETFs. We still have some mutual funds. We do a lot of innovative stuff, including leverage and inverse ETFs, flagship suite of dividend growth equity ETFs. And of course, you can see from my backdrop that we are the proud launchers of BITO. I've heard BITO, but I'm going to suggest BITO because it sounds more like Bitcoin. And BITO is indeed the first Bitcoin-linked ETF in the marketplace. We launched about a month ago and love the opportunity to share some thoughts on Bitcoin and cryptocurrency today.
Great. Well, thank you all for joining. And I did want to mention one thing that on Dave's comment. We are virtual again this year, 2 years in a row, but we certainly plan to be live next year. The reason we're virtual again is we are open at Georgetown. We are a fully vaccinated environment. So all faculty, all students, all staff are all vaccinated, et cetera. And so we've opened the school back up, but they have taken every single square inch of auditorium and meeting room space and conference room space to create socially distant classrooms. So it's not that Georgetown's not open. We are open and our students are here and it's a thriving environment. We just don't have the room to bring 415 people into the auditorium right now. So anyway, all right. So I want to get to the heart of it, the meat of it, why this is so important right now, why there's so much enthusiasm from investors and traders for these products. So how are, and this is for all of you, you can, however you want to, whatever you want to go in, how are investors utilizing exposure to Bitcoin and other cryptos in their portfolios. Why do investors want exposure to cryptos? And I could tell you what, Simeon, let's start with you.
Sure. It was great that we had that video before we went on, because that was a very good synopsis of what cryptocurrency is and what Bitcoin is. And it is both a mode of transaction and a store of value. But if you're thinking about what folks are doing with it in their portfolio, it's certainly not an accident that there's been a particular spotlight on Bitcoin over the last few months as inflation concerns have risen. Bitcoin has a fixed supply. It is not a fiat currency. It is not tied to the printing presses of central banks. So certainly the role of an inflation hedge is an important one. Call it a digital gold, if you will. And that's an important piece. And also simply the lack of correlation. If you look at the way Bitcoin has performed since it's been trading, it is quite uncorrelated with other asset classes, and things that don't do the same thing as every other investment class are getting harder and harder to find. Just about everything looks like it's correlated with everything else. So, that combination of an inflation hedge, a digital gold, if you will, and a diversifier are key reasons why folks are considering deploying it in their asset allocations and their portfolios.
Great, thank you. Anna, what are you hearing?
Well, I hear exactly the same thing that Simeon just discussed. Inflation hedge and a way to diversify your portfolio is certainly top of mind for our investors. But I would also add what's fascinating about Bitcoins is the level of knowledge and understanding or lack thereof from different investors at different sophistication level. The one thing that is clear is that there is a spotlight on Bitcoins. Bitcoins are a shiny object. Everybody wants to have Bitcoins in their portfolios. I would tell you just one story, which is my dad is 73 years old. He wouldn't be able to tell you what I do for a living to save his life. He owns Bitcoins. So it is access. It is a tool to hedge inflation concerns, diversify your portfolio. So there are many different uses that our investors are making of this new technology or asset class.
Thank you. That's we could share stories about when I launched QQQ when my mother was in her 70s. When she bought that, I was like. But anyway, so Dave, you've got $40 billion, a fund, basically a $40 billion fund with direct exposure to Bitcoin. Why?
Look, it's a new asset class, right? And it's a new exposure. And it's another example of a disruptive financial technology, not dissimilar to ETFs coming to market and disrupting the mutual fund industry in many different ways. And when you think about a burgeoning asset class and you think about the opportunity to make an allocation to that asset class, different investors are going to need that allocation for different reasons. And I think both Simeon and Anna, said it properly. Sometimes it's a hedge, sometimes it's exposure, sometimes it's a diversification play. But the reality is there's demand there. And I know we're going to get into the conversation around the regulatory framework associated with digital assets and putting them into, regulated products. But there's absolutely no contest to the demand profile for a broad range of investors wanting to gain access to digital assets. Bitcoin is certainly, the most kind of, popular or developed. But there is a long tail of investments that have other demands and have other applications and have other protocols, and all of that is really speaking to the fact that this is an asset class that is really developing and something that's going to be a portion of investors' portfolios in the future.
I appreciate that. And I think Nandini yesterday from the World Federation of Exchanges made the comment too, crypto is a new asset class and how she look at it. So for all those reasons. So you mentioned regulatory and the regulatory framework. So let's move to that one. It's been 8 years since Tyler and Cameron Winklevoss filed their first filing for a Bitcoin ETF in 2013. I actually went with them to the SEC in 2015 when NASDAQ was working with them to list that ETF. And so the SEC has been looking at a ETF on the physical Bitcoin for 8 years. They've now approved a couple on futures, and the Grayscale has a fund on the Bitcoin itself, but it's not an ETF, et cetera. So what is taking so long for the SEC to approve an ETF on physical Bitcoin? And will that change under Gary Gensler? Who wants to go first?
I mean, I think the guy with the actual ETF that has Bitcoin exposure.
Bitcoin futures, right. Okay, Simeon, let's go.
I love it when everybody takes one step back, but
Yes.
we don't live in the minds of the SEC, but what I can share is that the attributes of the futures market that led to the allowance, it's the SEC language, they don't approve anything, they allow things to exist. So that allowed our Bitcoin futures to come to market, are aligned with what we see as the advantages of the futures marketplace. It's a regulated place. This is belt and suspenders. That's the key to this. I was looking at the disclosure on a crypto account related to a brokerage firm, and I'm reading the disclosure, and somewhere in there it says, you could lose your money all your money on a fork. Like, and those of us on this panel could probably explain what the heck that was, but not a lot of other people who want to invest in it. And in the futures market, you have that CFTC. There is a clearinghouse. The counterparty risk is controlled for. It's almost impossible to manipulate the market. The little flash crashes that we've seen on all these exchanges don't exist. And in fact, there's even some evidence that there's faster price discovery in futures than in spot Bitcoin. By the way, that's not a radical notion. Credit default swaps, they show price discovery, meaning information reflected in price, long before cash bonds. So there's so many benefits to futures, and then it's belt and suspenders to be able to put that into a plain old ETF regulated by the 40 Act that someone can just put in their brokerage account. It really solves a problem for many investors who have wanted to invest in Bitcoin but haven't quite found the legacy ways quite the right path for them.
Yeah,
go ahead, Dave. And Dave, since you have a background with SSGA, please comment, because there are different ways to access gold, right? You can buy an ETF that has gold physical and gold on derivatives. So yeah.
John, you're leading the witness. I was about to go there. Like, I agree with everything that Simeon said. And listen, we're sympathetic to the reality of the job that the SEC has to do in kind of, investor protection. We take that very seriously. We've had wonderfully constructive conversations over the past, several years about, the opportunity for us to convert GBTC into an ETF. But the truth of the matter is pretty simple. There are other products in the marketplace that aren't necessarily designed to ensure that every investor makes money, and they're volatile, and they're in fact designed to gravitate towards zero, and underpinnings of other volatile assets. The truth is, if you're going to be able to approve a futures-based product, that future is based on the underlying market, and they're inextricably related, and therefore very basic logic suggests that a spot product or a physical Bitcoin product should also be allowed if a futures-based product is allowed. And in instances where an asset or a commodity can be reliably stored, such as gold or silver or other hard precious metals, it has been the overwhelming preference of the investor to have that physical product versus that futures product. And it's undeniable that futures products are more complex. They're more complex in a number of different ways. And so, look, the futures approval and the futures Bitcoin approval was absolutely a great step in the right direction. We're not anti that. We just think that investors should have a choice in how they want to experience the Bitcoin exposure. And so that's long been our stance, and we're really excited to have a constructive dialogue in the form of a filing and a comment period to allow us to engage with the commission and to allow our investors to speak their mind and to allow us to speak on behalf of our investors as well.
Sure. So, Anna, I'd love to hear your views, and also just segue right into the fact you've launched a suite of products on blockchain, crypto, digital, so not necessarily Bitcoin, but you've also already launched a suite of related products. So go ahead and please, I'm giving you a double question, so go ahead.
Sure, and I love it. I love the controversy, and I love that I'm coming in the middle of two positions that are on two different sides of the equation: Bitcoin futures or spot Bitcoin derivatives versus physical assets. So I'm a little bit in both camps. In that I do believe ETFs should provide access to an underlying portfolio. The strength of the ETF technology in the past has been all around providing a cost-effective access on a particular asset class geography portfolio. So whether you do that using derivatives, whether you do that using the actual physical asset or the actual physical securities, you gain something, you lose something. We had a filing for a Bitcoin futures ETF. We ended up pulling that filing because we were not comfortable with the cost associated with rolling futures, the market being in contango, not because futures are bad, not because a Bitcoin futures ETF is bad, but because we know our clients. And this is not something that our clients expect of us. We are highly committed to the physical side of the equation because we believe that a portfolio that invests in physical assets can be more closely aligned to the value of the underlying security. But again, it's not drawing a distinction between good and bad. It's really looking at our shareholders, looking at our clients, and deciding what is more aligned with your ETF strategy and your product philosophy. With regard to our filings and our 40 Act ETFs that are already in the marketplace. So I really think that when people hear Bitcoin, when people hear blockchain, digital assets, everything comes together as one. It's not just one thing. So digital assets and DeFi, that encompasses many, many things. Yes, you have the currency. I know I'm not allowed to say it's a currency, but I know you have Bitcoin and Ethereum and all the other coins. But then you have blockchain that sits on top of it. So these are different things. And this is not a one-size-fits-all. If you want to provide investors with returns associated with this new industry or asset class, there are different doors that you can open. There are different ways that you can go about it. And our filings are equity related. So we have two ETFs in the marketplace. One is a crypto ETF. The other one is a blockchain ETF. They don't invest in the underlying. They invest in companies that derive their revenues from either participating in the crypto space or in the blockchain space. So again, this is aligned. The returns of those funds, in our view, should be aligned with the returns of the asset class or the crypto space, which again should give investor access to this industry without buying the coin necessarily. So I hope this is responsive, John, to what you asked.
No, absolutely. So Simeon, a couple questions. Just tell us about the journey from concept to launch. What was the journey for your BITO? And then also, because it came up already from the audience and other people have asked it, just discuss the challenge of the cost of rolling the futures.
Sure. I'll fast forward most of the journey because the use of things like futures and ETFs is core competency for us. So that was pretty straightforward. But I have to say, I've been in this business for many, many years. And you can get kind of jaded and take things for granted. But to be on that floor at the New York Stock Exchange when we launched and so much attention on it, the energy was just, I hadn't experienced it in 3 decades in this business. And that was a really amazing experience. But look, we raised $1 billion in 48 hours. And it was very funny. I was on a panel about a week ago, and the moderator of the panel said, what's going on over there? You raised $1 billion in 2 days and then nothing happened. Was that just a little bit of pent up demand and then nothing? And I looked at the moderator and said, we're at 1.4. Another 400 million in 3 weeks is also pretty good. So, this is such a massive opportunity in a new asset class that sometimes people take this stuff for granted. And people ask us also, who are these constituencies? Are they traders or are they long-term holders? We think there's some of both. And look, those are constituencies that are important to one another and are synergistic. You could hold something for 3 years, but you know what? The day you buy it, you want a lot of traders around so the spreads are tight. And the day you got to go buy a house and sell it, you want those traders around. So that's been an important part of the journey, is the trading volume. And importantly, also the options that are trading on the ETF really make for a very powerful ecosystem. To your question on the roll cost of futures, look, it's a real thing. You can look at the history here. I can tell you as an example, in the month of September, the average daily annualized premiums, you always have to be careful because people in the future space, usually people will reference an annualized number. So, the difference might be 20 or 30 basis points that day, but imagine if you did it 12 times in a row, et cetera, et cetera. So on an average basis in September, the annualized premium, which would be the cost if you rolled, was about 2%. Since the launch of the futures market in 2017, that average daily premium has been about 5.5%. And indeed, it has been a little bit higher than that since we launched. So, there is a cost. We think it certainly compares favorably to many of the other costs. Remember, you can't just invest in that thing in the corner of your TV screen. There are multiple exchanges. Prices can vary by several hundred basis points. Even if you're going to go through an exchange, you still have to decide, where do I want my wallet? Do I want them to have my wallet? Do I want to have my own wallet? Is it going to be cold? Am I going to write it on a piece of paper? Am I going to put it on a memory stick? So there's never, as they say, there's never a free way to invest. That index is uninvestable, and it's of course true with Bitcoin too. But those are some of the key pieces of the journey for us, and a little bit of color on the roll cost of the futures.
So,
And I would also,
okay,
John,
go ahead.
and I would also say something on the investor base, which I found to be fascinating, which is, this asset class is very controversial. You are not going to find anybody who is in the gray area. People either love it or hate it. If you love it, you are going to buy the ETF. If you hate it, you are going to short it and buy the ETF to hedge it. So either way, the ETF is the perfect wrapper for you to achieve your investment objectives.
I thought you were going to tell us. I thought you were going to tell us where your dad's wallet is. I want to know, where does your dad decide to put his?
Well, it's an app. He has not redeemed it. So
John, I would add one thing to Simeon's point, and I'll speak for Anna. I know I can speak with confidence to say that raising $1 billion and then have nothing happen, raising another 400 million in your product in the next few weeks is kind of a nothing event. We'll sign up for that every day.
Absolutely. Absolutely. I'm ready for half of nothing. So Dave, let's transition, and not because Anna said a gray area, we'll go to grayscale, but you've got $40 billion in a fund that is SEC registered, traded in the OTC market, and offers direct exposure to Bitcoin.
Yep.
You've announced that you're going to convert that to an ETF, which in my thinking, boy, it really puts the SEC in a difficult position to say no, but let's talk about that. So, we talked about the ProShares product. We've talked about Anna's suite. Go ahead and talk to us a little bit about the thinking at Grayscale.
Yeah, so I think the question we get most is, why would you do that? And I often say that, this is really just an extension of a really well understood story of ETFs being a product that kind of expands the opportunity for equitable exposure, to underlying assets. And so I know that we think of, S&P 500 market cap weighted exposure as very plain vanilla, but in 1993, it was super exotic to have a market cap weighted strategy in a single product. That was an institutional offering that was then brought to the masses. And we saw that continue to happen with international equity exposure, and then fixed income and commodities and factor strategies and multi-factor strategies. And so this is just another extension of, we have a product that's offered to qualified investors, and we're going to have the opportunity to really open up that exposure to the broadest masses in a really equitable fashion in a battle-tested structure, the ETF. And we think, again, that having it offered in a spot-based product is really the best way to do it. And, again, it's not anti-futures based ETF, and it's just allowing investors to have that opportunity to get the exposure that they want to an asset class in the way that they want to gain that exposure. And so it's really about expanding the opportunity for a broader range of investors to access this asset class.
Great, thank you. We're running out of time. I know we could talk about this all day, and there's been a lot of discussion. So I want to do the flip side of the very first place we started. We started talking about why investors want exposure to Bitcoin and crypto in general. So what does the media, what does investors, what do traders, what does the world at large not get about crypto investing? So let's start with you, Anna. What does the world not get, or what are they missing? What's the underappreciated areas of crypto investing?
Oh, gee. So, John, I'm a lawyer by trade. So, what keeps me up at night and what I hope people get, but I'm not sure, is risks associated with this asset class because with every type of investment, to me, the best surprise is always no surprises.
Right.
And if you go into these funds, whether it is, private fund, OTC, Bitcoin futures, or God forbid, when the SEC opens the door to spot Bitcoin ETF, it's like the expectation of clients matching the returns of this investment. It's a very highly volatile asset class. It's a very volatile underlying. And as long as investors go into this market and into these funds with eyes wide open, I think we are all going to benefit from that. But I'm a little concerned about the lack of a full understanding of volatility risks and what can go wrong when making an investment in the ETF or the currency itself.
Dave, your thoughts?
Look, it's complex, right? And it's a developing asset class. And so the opportunity to access that asset class with, a trusted partner, a trusted asset manager, and a trusted wrapper is something that I think is the best way to offer investors the opportunity to, gain their first exposure into something that is certainly continuing to be, a developing asset.
Great. Simeon, the last word to you.
Look, we all want people to appreciate and understand the volatility, but I don't think most people get that wrong. If you're wondering what I think people often get wrong is there is an assumption that that volatility is aligned with things like the stock market. The stock market went up 1%, so Bitcoin must have gone up 5 or 10 or 15 or 20, but it actually hasn't quite been that way. Bitcoin has really zigged when other things like equities have zagged. So yes, appreciate the volatility, but understand that there's some zigging and zagging, and some of that volatility can be a feature, not a bug for many investors.
Right. I appreciate your comments. I appreciate your time today. Look, I think that we are on the very, very, very bleeding edge of a brand new asset class. So this certainly isn't going to be the last conversation about this. So I can't wait to continue that discussion and move forward. We could, as I said, we could have gone for hours. I'm going to so thank you guys. I really appreciate it. Simeon, Anna, and Dave, I went to the experts to get the insights, and I appreciate that.